What's going on, guys? Welcome to another video. So Bed Bath & Beyond is currently down 22% on the day, but that doesn't necessarily mean that the trend is over. This stock has elevated volume, and overall it has a lot of people backing it up, especially on Wall Street Bets, making tons of posts and rallying the stock. So the stock is still up 62% on the week. Monthly, it's up 251%, which is pretty normal considering people would want to take some profits. As we saw earlier in the week, people took profits around the $25 mark. And again, today, it's overall the market's a little bit down, and people are just taking profits on the stock. As we can see, it is holding its own around $18 per share. So let's go into how we can make some money off of Bed Bath & Beyond options. So of course, with the rise in volatility, it's going to cause a lot of these contracts to be pretty expensive. As you can see, implied volatility is around almost 500%, which is pretty crazy. And the higher the implied volatility, the higher and more expensive the premiums are going to cost for option contracts. So if we sell options instead, we can capitalize on these higher than normal premiums. So for example, if you're holding shares of Bed Bath & Beyond, we could do what's known as a covered call and sell some call options against our shares to collect some nice premium. But if you don't have any stock, what we could do in my most popular strategy is going to be selling puts, so we can really capitalize on higher premiums. If we take a look at the options contracts here, we can do something like a $12 cash secured put, and we're going to be collecting about a 1% on our premium. $11 per contract for, let's see, it's going to be $1,200 of collateral. That's going to be a 1% return in 1 week. Sorry, in 1 day, because right now it's the 18th. This expiration date is for the 19th. So it's going to be a 1% return in 1 day, which is pretty sweet, considering as long as the stock stays above $12 per share, we're going to be pocketing a nice premium. And it's going to be around a 92% chance of profit. Now, of course, we could do a further expiration date and collect even more premiums. As we can see, premiums are sky high through the roof. So we can go pretty far down our expiration, our strike prices. And something like this, we could do a $7 cash secured put. Let's get rid of this first one. And we're collecting $8 of premium. Now you're saying this might not be a lot of money, but this is a safe way to play Bed Bath & Beyond options, collecting 1% in 1 week. So if you do that every single week, that's going to be 52% return annually, which is pretty sweet, especially for people who want to play safer options plays. This is going to be around a 93.62% chance of profit, and it's going to be pretty safe because as long as Bed Bath & Beyond stays above our strike price of $7 per share, we're going to be making a nice return of 1%. And we can keep doing this week over week on high volatility stocks like this one as Bed Bath & Beyond, and other stocks such as AMC, and collect a nice premium. But of course, if it goes below your strike price at expiration, then you're going to be assigned 100 shares at $7 per share. So that's the beauty of selling cash secured puts. It's either collecting a nice return of a little bit over 1%, or we're getting shares of a stock at a cheaper price. So that's about it for this video. Thanks for watching.